Rebecca Walser is a president at Walser Wealth Management, and she's hooked up the generator from Florida where Hurricane Ian is hitting. What's going on, Rebecca? Thanks for sticking with the plan today.
Yeah, thanks, Oliver, for having me. Yeah, I've got the generator going, so that's the only way that we're able to work right now. Most everyone's back, but we're still out, so it's life.
Believe it or not, and I guess we should believe it in the world today of all the different types of investment products and themes. We've had people this week on pitching like hurricane investment ideas. There's a FEMA fund, and it doesn't seem that ridiculous that like buys into construction and relief. I mean, do you think this has economic impact, what's happening down there?
Absolutely. And before and after every hurricane, Oliver, we have a ton of Generac commercials and generator commercials. So absolutely, there's going to be a ton of money coming to Florida to get us out. This was huge. Thank God it didn't hit me directly, but all the people that did impact, I just feel so sorry for my brothers and sisters to the south in Florida. They were really devastated in Fort Myers. And so we really need help down here.
Moving northward now to South Carolina as well. Another complication in an already very confusing economic world we live in. This week we saw again, most of the data beat expectations. There were a few errant prints that weren't good, but the core job situation, how do we explain what's going on, Rebecca?
I just don't know if it's being picked up yet or not, Oliver, because we know that all of these companies have announced either freezes or potential layoffs are coming. And so I just can't see how the numbers, unless it's temporary seasonal workers, somehow I don't see how the numbers are going to continue to be sustained. And then when we switch over and we look at, the August core PCE obviously came in at 4.9, but it was 0.6 greater than what we expected, what we all projected. So we still see hot inflation, which means, just to your point in your first opening segment, Oliver, that yes, the Fed is going to be emboldened to continue on this demand destruction path because there is just still too much money floating in the system.
Now, if they continue on that path, which it looks like they're going to, what do we do? Do we take cash, put it to the side and wait, or where do we park it so that it doesn't get eroded by inflation? What are you talking with clients about as a solution right now?
We have been really leveraging commodities as a kind of a bridge to get us from where we are, because we just see this as a continuing downward shift, both on the bond side as they continue to raise interest rates. As we know, they've already been decimated, but they will continue to be even more. And then equities just don't like not being stimulated. If you go back to 2008 and we really started on this quantitative easing sort of modern monetary theory sort of stimulus, and for 14 years, we've been on that track. So this is a new sea change kind of world where the Fed is saying, oh, we've done all of this for the last 14 years, but now here we are at the precipice of fiat currency, and how far can we push this? And we just saw Bank of England this week basically admit that if they don't continue to buy, you're looking at the collapse of the British pound. So that is the scary, precarious, precipice, Oliver, that we have to worry, because the Fed, we all, like the market, wants the Fed to be accommodative again. But we know that if they did that at this point, that could literally erode the confidence in the dollar. And that is a lot of the battle that we're fighting geopolitically with Russia and China starting out with their own reserve currency. The dollar's prominence and preeminence in the globe is certainly under threat now. And that is a concern that we have as Americans. So this is really a new situation. The Fed has never been here before. The world has never been here before. And we in the United States have never been here before.
So as we are in unprecedented territory, how do you then combine the conviction in the commodity trade with the hedge in case things flip back the other way? And what if there is that Bank of England type reversal that the Fed does?
Well, I think, in fact, that would just be the exact opposite effect, Oliver. I actually think that would be, in fact, a collapse of the U.S. dollar, in which case you'd see metals untether completely. And I think that you'd see a gold and a silver pop to an extreme level that we have. We know Russia's coming out with a Moscow gold chain with London. There's a lot of stuff going on. We're pushing us so fast to a multipolarity world. But I actually do expect, Oliver, a gold and a silver hedge right now will get you through. I am expecting, unfortunately, I don't like to be the bearer of bad news, but I am still expecting this market to have some sort of black swan between now and the end of the year. I hate to say it, but I just don't see enough power in what the Fed is trying to do to prevent this from actually coming to the worst kind of scenario. And of course, Oliver, doesn't help that we have the world on the precipice of this World War III situation with Russia, Ukraine, NATO, annexation. I mean, this is just, we couldn't have the worst market. We don't have a market that can sustain anything right now, any little match. And we're looking at a really huge global impact. So it's just all around not the best timing. And I just think people need to be really cautious right now.
Okay. And again, I'll give you credit, a message that you've continued to pound the table on here for months correctly. Thanks for the update. Glad we got you on the program, Rebecca. Be safe.
Thank you.
Sure thing. Rebecca Walser, president of Walser Wealth Management.